Hi, it's David Worrell, your DIY CFO, and today I want to show you my crisis cash plan. This is a little bit of an advanced topic for folks who really want to drill down on their cash flow forecast during this unusual crisis we're in the middle of. And so I've got several tabs, but when we're done, I think you're going to see that you actually end up with something really simple. So what we're shooting for is what I call a 12-week cash plan. Rolling 12 weeks is what some people call it, but we're looking to project into the future May, June, and July. So let's start by just thinking conceptually for a second. How would you project the cash flow for your business for the next 12 weeks? And I think to do that, you would want to know how many customers you're going to have and how much they're going to buy from you, what kinds of expenses you're going to have, particularly wages and payroll expenses, which are the biggest ones, and how much cash you have in the bank now so that you can see the effects over time on your cash balance. So let's start with customers. If you want to know how much money is coming in, you've got to think about whether your customers are going to be buying from you or not. And so my suggestion is that you go through this first tab of my cash plan sheet and you list your customers down the side and you show their actual purchases from you during the last 3 months, February, March, and April, right? So here we are. This is the first week of May 2020. And if you can look back even into March and April, I think you're going to get a good idea of what's happening. So February was a pretty normal month, and you can compare the results from March and April to start to see that trend line and project how much each customer might purchase from you during May, June, and July. Now, if you're a restaurant, you might not want to list all of your customers. Maybe you just need one line. If you're a retail store, maybe you have certain groupings of customers, like if you're a florist and you want to have a group of wedding customers or party customers or retail walk-in customers or something like that, so that you can get just a little bit granular with your customer mix, but obviously you're not going to list them by name. Other companies like mine, I'm going to put my actual customer's name in each row, and I'm going to break out exactly the amount of sales I've had from them over the last 3 months, and then I'm going to project it forward. And so keep in mind, the actual comes out of your accounting software, your QuickBooks or a spreadsheet or whatever it is that you keep your books on. Projected comes right out of your mind, right? There's no magic to that. You look back at the last few months that you've had and you think, is this customer doing well? Am I allowed to serve him? Are the doors open and are they coming in, and what are they going to spend when they get here? So step number one, do your customers. Step number two, let's talk about employees. For most people, wages are the largest expense, and so I've given you a quick little way to list every employee in here and their actual wages paid during the last 3 months, and then you can project the wages that you think you're going to continue to pay. Maybe you're going to lay some people off, and so there'll be some zeros here. Maybe you had to hire some extra people because you're complying with the PPP, but you can put those people in here also. So I've broken it down into two pieces for you, direct labor and indirect labor. For most people, that just means people employed under direct labor are those that are contributing to your actual product that you sell. If you're building a house, these are the contractors the crew on the site building the house. If you're in retail, these are the people on the shop floor. Indirect labor, that's just a nice way of saying back office or admin, anyone in sales or support roles who does not contribute directly to the product that your customer buys. But nonetheless, you want to count them. Maybe you treat them a little differently. Maybe you have cut back on your marketing or sales expenses. That's fine. You can show that in this indirect labor tab. Okay, play around with that a little bit, again, showing your actual for the last 3 months and then your projected for the next 3. And let the spreadsheet total all these up for you, and you'll see where these total numbers go in a second. Okay, finally, the third tab is a profit and loss statement. So it's helpful if you want to paste in your actual P&L, your actual income statement from, let's say you run QuickBooks, okay? If you can generate a month-by-month income statement and just paste it in here, this is just for reference sake. And if you want, you can even go line by line and project those things here. Now, I'm it does not roll up anywhere. It doesn't, once you've pasted this in, it's not linked to anything else. This is just a worksheet for you to think through all of your other expenses. Okay, so finally what you want to do is hit the fourth tab, the cash plan tab. This is what you've been waiting for. And some of these things are going to roll up. So here's your sales that you calculated under the customers tab, but there's also a line for you to insert other items. So I know what my sales were during the last 3 months, but PPP has given me an opportunity to sell something new. So I'm going to put some extra income in there. Or maybe you've pivoted and you've changed the way that you're offering your product, and you can put some additional income in there if you like. Cost of goods sold, COGS, that means the material and direct labor, things that go into making your product. Materials, that's up to you. You're going to have to look back at your P&L and say, okay, how much did I have to buy to sell my products? How many raw materials or inventory or lumber or food or whatever it is that you use to make your final product? Put those in the material. Direct labor is going to come from your employees tab. So we already did that, and the blue, you'll see the blue zeros here. They should carry over from the prior tab. Overhead expenses, this is the indirect labor. Again, that carries over, but there's also lines for you to put things like owner's wages, how much are you taking out of the business, and all other expenses. So I would go to your P&L statement and I would just add up everything else: rent, utilities, water delivery service, uniform cleaning, carpet cleaning, whatever it is that you spend money on. Add up everything else that's not materials or labor and put that into the all other expenses, because you know what? At this point, we don't really care what you're spending it on. Now, you can go back to the P&L and you can say, I'm going to spend a little less here, a little more there, but what we really want to do on this tab is just crunch it all together and show you the big picture of how much you're spending. So with that, you would say, okay, I'm done. I've got all of my sales and all of my cost of materials and all of my labor and all my overhead, so I must be finished, right? Well, not quite. That's what makes this different than your P&L, your income statement that you use in QuickBooks. This is a cash flow table. So we're looking for all the uses of cash. And some of the things you're going to use cash on include payments for loans, right? Maybe you have a credit card outstanding and you're going to make payments to the credit card. Any debt service, we call that, you get to put the actual cash that you're going to use in these 3 lines here. You can add more if you need to, of course. And that's going to give you the final total uses of cash. But wait, there's more. What you really want to know is how much money is left in the bank at the end of the day. So you can put your starting balance in here, and this will add up all of the uses of cash above and tell you what your ending balance will be. In this case, of course, we're not spending anything, but it would go there. Okay, so the number you're really looking for from your January, February, March actuals is the ending balance in your bank, because that's going to start to tell you what your balance is in April, May, sorry, in May, June, July. So make sure that you've got your ending bank balance in there, and when you project the expenses here, you'll see that your ending bank balance will go up or down based on whether you're using or accumulating cash. Okay. The only thing you want to avoid, of course, is that number going negative. You don't want to see a big red number in your ending bank balance. If you do, you can take some strategies, and this is built in here for you. You can pay some of the expenses that are above by credit card. You can take out additional loans or get more cash out of your loans that you've got, or you can contribute more cash yourself. So there's a couple 3 lines here for your crisis planning mode. Where am I going to get the cash to make sure that my bank account doesn't go negative in the future? And again, we're only projecting 12 weeks out, about 3 months, and that's all that I suggest at this point. It's hard to see the future. You can, of course, try to do this for 6 months or a year, but if you've got a 12-week view of your cash availability, I think you've got time to make adjustments and make big decisions that you might need to make to change things about your business. So I encourage you to get this download off our website. If you already have, thank you. And now it's all yours. Follow along and see where you can see how you can change your business to make sure you don't run out of cash. And good luck.